China surprised the global economy by injecting as much as 14 trillion baht into the system within just 3 months before the end of this year. Hello, and welcome aboard to all passengers at Asset Takeoff Airport. If you're ready to join this journey with our financial freefall airline, you can support the Sai channel via this QR code. Then come along with us. China Asset Airlines is soaring high. It's really taken off like crazy. This because the Chinese government has announced a massive cash injection into the system using a variety of methods and measures. If you look at this chart, you'll see that in the 1 to 3 months before the end of the year, the amount of money pumped in reached as much as 240 billion US dollars, which is about 14 trillion baht. On top of that, they're also preparing to raise funds by issuing another 2 trillion yuan in government bonds. So right now, if you just recently bought Chinese stocks, your portfolio is probably looking very green and healthy. This excludes those who bought 4 or 5 years ago. They're still stuck at the top, as stocks only recently surged. For Chinese or mainland stocks, A-shares, for instance, have climbed out of a deep hole, rising 17.9% from their lows. As for the Hang Seng market in Hong Kong, it has rebounded from the bottom by as much as 21%. On just one day, when China surprised the global market by announcing a cash injection into the system, Hang Seng stocks shot up by 4% in a single day. You could say it was the best day for the Chinese market in the past 4 years. In addition, China's 10-year government bonds are now offering higher yields, rising from 2% to 2.1%. All of this is because China announced a cash injection into the system. Injecting money into the system is basically like printing money, which is a way to stimulate the economy. And this round of stimulus is massive. It's the biggest since 2020, or since the COVID crisis. But there will also be a cut in the amount of CA. So, what methods are they using to inject money? There are several approaches, and I'll break them down for you, because the PBOC has announced that it's injecting money into the system to help financial institutions first. That's a total of 500 billion yuan, which is about 2.3 trillion baht in Thai currency. And there's also another 300 billion yuan set aside for large listed companies, so they can use this money to buy back their own shares. This 300 billion yuan is roughly 1.4 trillion baht in Thai currency. Baht. And there's also a plan to inject another 500 billion yuan, which is another 2.3 trillion baht in the very near future. Very soon, it's like calling up big companies and saying, hello, you are the lucky one who gets a low interest loan to buy back your own shares. It's just so sweet. On top of that, the PBOC also announced policy rate cuts across the board. If you look at this chart, you can see that everything is going down. This is like the biggest end of the year sale ever for borrowing money, and the interest rates are dropping even further. This money is ready to be lent out across all sectors, whether it's real estate, consumer spending, or businesses and shops. You can get a loan right away. Next, they announced a reduction in the RRR, or the reserve requirement ratio, at the banks by another 0.5%. The reserve requirement at the banks means, for example, when we deposit money into the bank, when you deposit money in the bank, right, the bank has to keep a portion of your money as a cash reserve, which is usually quite high. But now China has reduced the amount of cash reserves. That means when we deposit money in the bank keeps less and can lend out more money. They can lend out. They've reduced it by 0.5%. This move will inject an additional $140 billion into the system that banks can lend out, which is about 4.6 trillion baht. They also lowered the interbank lending rate too, because when we transfer money to a bank, right, the banks will sometimes borrow from each other, like in a certain circle, something like that. This is called the 7-day reverse repo rate, which is a short-term interbank lending rate. It was reduced from 1.7% to 1.5%. The number might not seem like much, but don't forget that the economic system, China's economy is huge. So even a small reduction like this means there will be more money available to lend out, which could amount to billions of US dollars. Next is the policy to support the real estate sector, which is to lower mortgage interest rates. That means reducing mortgage debt for people who are currently paying off their homes by 0.5%. For example, if you took out a loan to pay for your house and you're currently paying 6% interest per month, they'll reduce it to 5.5%. Do you know that when you're paying off a house and the interest rate drops like that by 0.5%? And if you look at the length of time you have to pay off your mortgage, this interest rate reduction means that in some cases, you could actually save money on your home loan. You could end up saving millions over the course of your mortgage payments. This policy will reduce interest rates for people buying homes across China, covering about 50 million homes in total. That's a total of 150 billion yuan. If you convert that to Thai baht, it's about 700 billion baht. And China has also announced a reduction in the interest rate. They've also lowered the interest rate on down payment installments. Normally, before this, if you wanted to buy a house, you had to put 25% down payment. Now they've cut that. You only need to put down just 15% to buy a house. And of course, to wrap things up, there's also some extra cash handouts for the poor as well. This program also includes cash handouts for the poor. A total of 4,740,000 people will receive it, with a budget of 154 billion yuan, or roughly 700 billion Thai baht. Similarly, China is injecting money into the system. If you look at it just like that, that's all you see. But that's not it, not at all, because the reason China has to stimulate the economy this much is because their economy isn't doing well. The Chinese economy is an economy that is hard to explain because there are layers. When things are good, they're unbelievably good. China can run a huge trade surplus with other countries, and it's currently the only one that can do that. It's like they aren't even reading the group chat. Their trade surplus is so big that even the US and Europe are unhappy about it. And Thailand isn't happy about this either. Like, China floods us with cheap goods and makes a profit off of us, right? But the part where China crashes, well, it's a hard and deep crash. And the crash is really widespread. That's the real estate industry. Because don't forget, China's real estate sector was booming, like booming really hard, and it lasted for many years. It actually made up as much as 25% of China's GDP. That's 1/4 of China's income coming from real estate. And look at this. The house price index in China, over the past 3 years, housing prices have just kept going down and down and down. On average, housing prices have dropped by about 10% per year. So that's why the real estate industry hasn't recovered at all. And what hasn't recovered along with it? People's savings haven't bounced back either. About 70% of it is tied up in the real estate sector, in real estate. So when Evergrande collapsed and went bankrupt, it went down along with people's financial lives. All the lifelong savings of the elderly disappeared along with it. So it ended up causing the domestic consumption sector. China's recovery didn't just stall, it essentially collapsed. Consequently, major firms like Goldman Sachs and Citigroup lowered their GDP forecasts for China from 5% down to just 4.7%. But China disagreed. If it's 5, it has to be 5%. So they launched major stimulus and mandated a GDP growth of 5%. Now, if you ask whether injecting money into the system, or basically printing money, comes with a price, well, it always does. In the long run, it never ends well. But today, let's take a look at the short-term picture first. Let's see what happens in the short term when a country this big injects this much money into its system. What are we going to see in the global asset markets? Looking back at history, if a major country, whether it's the US or Europe, and today it's China, injects money into the system, meaning there's more money flowing in, it causes people to want more things, want this and that. Yeah, when people have money in their hands, with the means to satisfy desires, they buy assets. Asset prices rise, like gold, oil, or Bitcoin. Prices go up just hours after China's major economic stimulus announcement. It caused the prices of copper and aluminum to rise by over 5%. As for stocks, they definitely went up, just like I showed you on the graph earlier, that both mainland Chinese stocks, large cap stocks, and stocks on the Hang Seng Index also surged across the board. Like I mentioned, when there's a lot of money flowing in, people start wanting more things, right? So besides commodities whose prices have gone up, believe it or not, LVMH, the owner of Louis Vuitton, also benefited from this. LVMH's stock price shot up in the green. This move made Bernard Arnault, the owner of LVMH, suddenly, in just one day, saw his wealth increase by $100 billion US dollars. Now, let's interpret this. The meaning is that the prices of all assets are going up. In one simple sentence, when everything gets more expensive, that's inflation. Back in 2012, the ECB, the European Central Bank, launched QE, pumping money into the system in what they called an aggressive monetary policy, injecting money aggressively. At that time, countries like Greece, Spain, and Italy were on the verge of default. They had debts coming due and were about to default. But once the ECB pumped money into the system, these three countries were saved. After the ECB injected money into the system, it caused the US stock market at that time to 2012 rise by as much as 13.4%. Then, the following year, Japan also implemented a similar policy called the Super Easy Money Policy. It was another round of pumping money into the system, and in the consecutive years, this caused US stocks to jump as much as 29.6%. And what about Thailand? Oh, Thailand, at that top, the SET index also went up. It rose too, because when the big country pump money into the system and stock markets everywhere go up, all over. It looks good, right? So what's the catch? Yeah, it looks good. Especially over the next 6 to 12 months, it's believed China will definitely roll out a combo set of economic stimulus measures, just like the US Fed, which has cut interest rates, right? And there will have to be other countries that will also have to implement QE policies, injecting money into the system like this as well. Whether it's cutting interest rates, lowering bank reserve requirements, or the simplest of all, handing out cash, this means assets will become even more expensive. Because during times like this, it's called easy money, a period when the value of money is really declining. So during this period, holding cash might actually cause its value to drop the most. Let me give you another example. Like right now, TARP back in 2008, which stands for Troubled Asset Relief Program, on October 3rd, 2008, the US government announced an injection of funds into the system after the hamburger crisis, up to $700 billion US. On that day, the stock market in America went to the moon too. But in the end, what's the risk? Printing money comes with a price to pay, because printing money, it causes the value of money to decline. Government fiat money loses its value because there's inflation, there's money printing, there's massive borrowing, and for China, this isn't the first time they've stimulated the economy. If you look at this chart, you'll see that every time there's an arrow, it means they've already stimulated the economy several times. Each time they stimulate, it's a dead body twitch, but there still hasn't any time in the past 3 years where it was actually successful and managed to pull the Chinese stock market into a real uptrend. So this time, we still have to wait and see. Even if they go all out with a combo set this big, whether it can really push the Chinese stock market into a true uptrend yet. And you have to remember clearly that the money being pumped in, it's the foundation being laid for the empire of economic crisis, an economy that's basically a bubble, because it's a massive debt-adding spree that devalues cash everywhere. With prices soaring sky high, I call this the hot seat. And I have to warn everyone sitting in the hot seat, all of you need to lift it up. Let me warn you first, don't get too carried away enjoying the rising prices of assets in the market, because a hot seat is still a hot seat. If you don't get up in time, you'll end up paying for everyone.